And we are at Cobo, Asia's leading digital asset management and custody service. We'll be talking to Lily, the Chief Operations Officer of Cobo, in just a bit, so hang tight while we begin the interview. Okay, hi Lily, welcome to Coinlive Talk. That's really amazing that we have you here today. We're going to begin this interview with some quickfire questions. Now, first of all, to date, what would you say is your best investment in the crypto industry?
Your time and the commitment into crypto space is the best investment.
Personally, would you pay $100,000 for blockchain-secured JPEG images?
I will. You are not only owning a piece of JPEG, but also a piece of history.
Bitcoin or gold?
Neither. I don't believe in any assets that you can just hold for good.
If you could create an NFT project, what do you think it would look like?
Actually, we are working on a NFT project. It's a soul bound NFT project together with Gnosis Safe and MMI. It looks like a soul. Really, it really looks like a soul. Okay. Yes, you will be able to see it in late November.
Do you think there'll be a day where the Cai Peng store downstairs will be able to accept crypto as a form of payment?
Of course, maybe tomorrow.
Fingers crossed. What's the next big narrative you're looking forward to in crypto?
I think it will be tech-driven, crypto adoption that will have deep interaction with real-world economy and real-world impact.
Now, what's the one thing you want to say to the world right now?
Join crypto right now and let's build up together, make efforts to be the leader of the next wave.
Now we're going to move on to the introduction portion of today's interview. Now, first of all, for the sake of our viewers, could you tell us a little bit about what Cobo does and its position in the crypto trading ecosystem?
Cobo is a blockchain technology company and that focus on blockchain crypto custodian from traditional institution to crypto native teams.
What exciting projects is Cobo currently working on?
So we are working on 3 different products. We have centralized custody, semi-centralized custody, and a decentralized custody solution. So for centralized custody solution, the exciting thing is we are working with MetaMask institution to offer hybrid solution to traditional institutions. So by hybrid, I mean they have a centralized custody account, but from the centralized custody account, they can still interact with decentralized protocols, NFT, DeFi projects through MMI integration. So for semi-centralized custody solution, our product is called Argus. Argus is a smart contract-based custody solution. So this is a very specialized tool. We encapsulate our DeFi protocols into SaaS solution for our institution clients, for them to have better tools to interact with DeFi protocols more securely and efficiently. So they can generate stable yield from DeFi protocols. And we are also working on the third product. It's next generation custody solution for institutions. It's a multi-chain, cross-layer, decentralized custodian chain called Cobo chain.
For many of us, crypto is still a nascent space. Why would you say that having custody solutions over your digital assets is so important?
Custodian platform is the first gateway for institutions. And for institutions' use of wallet and custodian solutions, it's even more complicated because for personal use of wallet, you need to be careful about scams, hacking, right? And you also need to monitor the on-chain data. But for institutions, there is even more team collaboration involved in the use of wallet. Other than the safeguard of your crypto, the digital assets, you also need to design workflow, role delegation authority to make sure you know what your team members are doing.
There has been a spike in exploits and attacks recently with the exploit of cross-chain bridge BSC, Token Hub being the latest target of a bridge exploit. What do you think institutions and retail investors alike can do to better protect themselves within the crypto space?
The currently leading crypto institutions still only has very short history of business. So this industry is still early. So it's not risk-proofed. You need to look at the management. You need to look at the nature of business of all the crypto platforms you are interacting with for retail investors. And I would think more focus need to and the time, commitment, and the learning need to be spent on security side. You really need to understand the underlying the technology and the risks associated with the protocols you are dealing with. Like for example, instead of looking at the API only of DeFi protocols, you need to really study the team members and where they're from, what are they good at, and their white paper, their tokenomics to understand it. And I also encourage retail investor to spend more time to learn about technology itself instead of the value of token.
Now, would you say that institutions play a part in encouraging the greater uptake of crypto?
Institutions, they have access to large amount of resources. They also have existing large number of clients. So their participation, interaction with digital assets will affect a lot of retail investors. So I think institutions need to create more accessible, friendly, and also safe tools for the market, both retail and institutions. There are institutions to be business, there are institutions to B2C business. And for those to B2C business, it's even more important.
How would you describe the inertia level of traditional institutions towards moving into the crypto space, such as procuring their own digital assets?
I actually see the swing of institutions between inertia and the formal. Like in a bull market, you see more formal from institutions. Like every one of them are anxious to enter this space. But in a bear market, you see a high level of inertia. So big institutions themselves are struggling with the market move. But I think really they need to focus more on technology development itself instead of the price and the value.
Right now, there's been quite a lot of anxiety surrounding institutional involvement in crypto for fear of power consolidation. If you look at Ethereum, for instance, around 30% of total staked ETH is held by 3 institutions alone. Do you think that greater institutional involvement in crypto will lead to more censorship or centralization?
High concentration is a severe problem right now. But the institution participate doesn't necessarily mean censorship. I believe for underlying technology, permissionless nature of blockchain technology itself need to be guaranteed and protected. But applications running on the blockchains can have different priorities. Institutions who are looking to have mass adoption, if they want to achieve mass adoption, then they need to pay for heavy compliance, and they will run on centralized structure. But for institutions actually want to run on DAO structure, as long as they can prove they are generating decentralized team, they should have room for less compliance.
Right now, we aren't just in a bear market for crypto. The rest of the world is suffering from an economic downturn. What are some of the investment trends you have observed from the part of Web3 institutions to survive in this current climate?
I feel for all the funds and the VCs I talk to, I feel their strategy now is to talk to everyone and find the next leader. For large projects, like for unicorn companies, you see the valuation shrinks. But for early stage projects, you actually see very active attitude from VCs.
Do you think crypto and Web3 firms should look to traditional institutions such as banks as learning points, or do you think they should forge their own unique growth trajectory?
I think the success product would be a mix. You need to learn product experience. Well, traditional big institutions, they have more experiences from customer. Right? They have more interaction with them, know their behaviors. So their data and the experience will help a lot for product experience for Web3 projects. But crypto native experience also very unique. So I believe the successful product offerings would be a mix of both.
Now, lastly, what do you think DeFi projects can do to achieve better fundraising for their projects?
Real innovation, not the design of the token value itself. And also find a way to integrate the real world economy and assets into DeFi protocols is the thing that every key investors are looking for. So if there's no speculation, the real users are less.
Yeah.
So to encourage your real user case, you really need to interact with the real world.
All right, thank you so much for that. And that wraps up our interview with Lily, the COO of Cobo. I think there were some amazing learning points that we could take away from that interview. Now, to find out more about Coinlive as well as the other content that we do, please visit our website at coinlive.com, and we hope to see you next time for another episode of Coinlive Talk.